the letter that Warren Buffett did for you. If you can show us the letter.
This is something that Warren had written. Young Warren Buffett was sitting in the Omaha Public Library, picks up this book, and he's like, when Warren met Charlie Munger, he started to think about...
I got to know that you spent your 50th birthday.
Yes.
Chinese house.
Yes. And I'm just like, oh my gosh, I waited my whole life for this thing, and I can't think of one question. You can have a great mentor, or you can have great heroes. Charlie Munger has been a great hero of mine.
If you have $300 million, how do you decide how much to put in?
Tesla, Google, these are businesses that are creating enormous value. Tesla has graphs upon graphs upon graphs. I think Tesla's going to be there with many different form factors. There's something being built for the real world, some that we can't even imagine what they are. Extraordinary what they're doing, right? We're a Google investor. Don't get me wrong, I'm like, do we have optionality in Waymo? It's night and day. Tesla for us is about a 10% position in our fund, and I think it should be bigger, and it could be bigger.
Who do you consider the greatest investor of all time?
I have to give the obvious answer would be Warren Buffett.
What's the biggest switch that happens when your capital changes from 3 million to 30 million to 300 million?
Well, 3 is not really serious investing. You're kind of doing it as a hobby.
What was the most psychological, sky-giving investment for you?
Life is 3 things. It's skill, courage, and luck. To be lucky, you have to be courageous. That was my moment to flip the script and say, I'm going to be courageous.
Hi, everyone. I'm your host, Shivank, and we are part of the 01 Network by Zerodha. Together, we intend to bring you insights from the top thinkers in the field of entrepreneurship, technology, and investing.
Professor, you are one of the most important figures in the community of value investing. I think you teach the same course which Benjamin Graham and David Todd used to teach, right?
Mm.
What do you think? During the time when Benjamin used to take this class and the current times, the times of 2025, the world of AI, what has changed and what has not changed?
Great question. So Ben Graham's taught security analysis from 1930 to 1960. And it was at a time where there were no principles of investing written down. What we knew about investing was really speculation. There were booms and there were busts, and no one had ever written down what intelligent investing is and what it should look like. And Ben was the perfect person to kind of assess and to start thinking about writing them down. So in 1934, he sat down with David Dodd. They'd already started the class and said, we need a textbook. We need a textbook that describes this. And that was the first edition of Security Analysis, which, is still a timeless text. What they did there was really remarkable. It was quite academic, very thick. And there's been now seven editions of that since that have been, written, and different forwards and so forth are written. But those timeless principles of what it is, what value investing means, which is how do we identify what something is worth and buy at a discount of what it's worth. That will never change. That is ultimately the expression of all investing. Speculating, which is buying something with the hopes I can sell it to someone at a higher price, is something very different. So what Ben was trying to understand is, what is intrinsic value? What is something worth? If it's a collection of assets, can I buy those collection of assets at a discount to what those assets are worth? And so what Ben was really articulating in those early years became what I call value 1.0, which was, here's something I can value and I buy it at a steep discount to that. And that worked very well. And, Warren Buffett came along, read a later book that Ben had wrote in 1948 called The Intelligent Investor. And young Warren Buffett was sitting in the Omaha Public Library, picks up this book, and he's like, this is amazing. This is how I want to spend my life. I want to learn these tools. Who's this author? Ben Graham. Where does he teach? Columbia Business School. I'm going there. And he applies famously in the spring of 1951, goes to Columbia only really to learn from Ben. And it was remarkable. But what Warren, he was just learning those general principles of this idea that you can actually, calculate something and then you go out and in search of finding something that varies from this, that made sense to him. And, when he graduated from Columbia, he begged Ben Graham for a job, and Ben said no. He was hiring mostly, Jewish students that didn't have an opportunity, but he finally succumbed and said, okay, Warren, you can have a job. And, Warren actually worked with Ben Graham for about a year and a half before he went back to Omaha. And at that time, he really started the the Buffett partnership, which became Berkshire Hathaway. But what's changed over that period is, when Warren met Charlie Munger, he started to think about, doesn't it make sense to buy a great business or a good business at a fair price and own that business for a long period of time? And let's compound that in that business. And so that's how I would define as value 2.0, which is, let's not buy something at a discount to what it's worth. And once it reaches value, you sell and buy something else. Let's buy something that is a reasonable price, that's growing, and let that compound over time. And so that's something that's changed. And I think, Warren and Charlie have written about this. I would say there's a third category that's emerged, which I would call value 3.0. And that's where, it's not necessarily, the valuation is not optically obvious. It's not something that we could point to and say, this is trading at 10 times earnings, and that's a good value for that good business. Or even 15 times earnings, there may be no earnings. There may be cash flow that's being used and reinvested in the business, and you need to do some add backs to the income statement. You have to really understand something based on the value creation that business is being part of. And so that's an area that, myself and a number of other investors have been exploring the toolkit that we need to have to assess these businesses that are really creating a lot of value, but that the valuation may not be obvious that they're attractive value investments. And so there's a couple of practitioners that I would point to that really have defined this value 3.0 category, and I've learned a lot from them. And there are a bunch of investments that we can point to that would be indicative of this style of investing. I mean, Amazon in the early years, like, how would you, looking back, it was a value, but how would you have assessed it in that moment? Costco, even something as recent as Palantir, Tesla, Google. These are businesses that are creating enormous value. We know that they were value investments in there, and we know there was a moment where they reached escape velocity in the potential for symmetry in their investment returns. So one of the things that we are always paying close attention to as concentrated value investors is, how do we lose? So everything we do from a value lens has to be asymmetric. So we've eliminated most probabilities of zero. If the path to zero is even 1%, we're probably not interested. We want to remove the chance of permanent loss of capital, and then the vectors of asymmetry stack on themselves. We're saying, if this happens, we'll make a modest return, but the highest probability outcome would be a very, very attractive return. And then there's a bunch of vectors that would be extraordinary returns. And that optionality is really kind of what we're seeking, is lots of asymmetry, but where the vectors are very wide. Our worst case scenario is we get our capital back with a single digit return. Best case, maybe high 20s IRR over 10 years. We're looking for a long duration. Yeah, it's a long answer to the scope of the, I think, emergence of how value investing has been redefined.
No, this is wonderful. I've got a lot of follow-up questions on this. Can you predict what would be the concept of value 4.2? Do you have any ideas about that? If you were to predict something.
Ooh, I love that you're going there already. Yeah, I've even been calling it value 3.14. only because it points to pi.
Okay.
But 4.0, or whatever you want to call it, would be some semblance of the whole, right? I think we are a real positive impact on the world in all counterparties. So 3.0 is great. You're creating value. You're reducing entropy. You're moving more information through your system. But I think 4.0 is doing something even more profound for the future of its customers, its community, the holistic environment, and it's kind of taking into account all counterparties of the system.
So you call them value ESG investor? ESG value investor, something like that? But it's beyond even that.
It's beyond that. Oh yeah, no. The ESG was as a category and title and label that I found not to be altruistic. This comes from a very deep first principle approach to how are we truly reducing friction and entropy across many nodes, many, the way that things have been done before.
Let's do a thought experiment.
Yeah.
Let's say if Benjamin walked into your class in 2025.
Yeah.
What do you think? What would he be most shocked about? The world as well as the students?
Ben Graham was a polymath. Aren't aware that he spoke many languages. He would translate these amazing Greek and Latin, and that was what he was doing in his free time. So he loved thinking, what I would say, laterally about the world. I think he would be pleasantly surprised that the conversations that we were having in that classroom weren't just conversations about a particular company, but that we were having conversations about how we can pull from many different disciplines and apply those to an intelligent philosophy of value creation. And I think that may have not been, I think he lived in his Wall Street world, and then he did a lot of this in his spare time. But to combine those and to bring those to bear on intelligent investing, I think he'd be pleasantly surprised with these conversations. And so in our classroom, we'll have, Ian McGilchrist, who's sharing insights about how our brain hemispheres work, left versus right brain, nature versus nurture. We've had our friends from the Santa Fe Institute in to talk about complex adaptive systems. We have David White, the great poet, come in and share how to think about intuition in many different ways, right? But we're also talking to the greatest operators. We're talking to the greatest investors, and we're bringing all those things to bear to try to create a real way to see the world differently.
What Warren Buffett was to Benjamin, who is someone to you?
Warren Buffett to Ben Graham. So the mental model that I like to use is you can have a great mentor or you can have great heroes. And I think that the perfect match is to have a great mentor, because the mentors are really going to kind of bring you along and be just maybe tough medicine when you need to be, But great heroes is a great path. And I've had so many great heroes. I mean, Warren has been such a big hero of mine over the years. Charlie Munger has been a great hero of mine. I've had the great fortune of spending some time with Charlie in his last couple of years. And that was very special. Peter Kaufman has been an extraordinary thinker for me, because he's such a polymath. He was dear friends with Charlie Munger, probably one of the few people that really could intellectually hold court with Charlie, right? And Peter has influenced me in many ways, but his mental models, the way to see the world, have been spending time with him in those early years when I was very formative. He really helped simplify the world for me. My filter was here, and I was just able to kind of really simplify, and through that, kind of the learning curve got much steeper.
I will double click on this simplification of the sphere.
Yeah.
I got to know that you spent your 50th birthday
Yes.
at Charlie's house.
Yes.
Please tell me about that story, and more importantly, what was certain thing that you learned over him, not only in that dinner, of course, please tell stories about the dinner, but
Yeah.
also over a period of time.
It was always my dream to spend time with Charlie in person. And I was heading out to the Singleton CEO Prize, which happened to be in LA that year. And the invitation comes in. It was on April 19th, which was my 50th birthday. And I was like, oh, do I really want to spend my 50th birthday, with a bunch of investors in Beverly Hills? And I'm like, I needed that little nudge. And I was like, oh, this is a good idea. I'm going to ask Peter Kaufman if he'll host a birthday party for me at Charlie's house. It's just absurd, right? But Peter would always say to the students, he said, life is three things. It's luck, courage. It's skill, courage, and luck. To be lucky, you have to be courageous. And, that was my moment to flip the script on Peter and say, I'm going to be courageous. And I'd like, and he wrote me right back and he's like, Chris, what kind of cake do you want? And it was a beautiful, invitation to kind of have this experience, and invited a few other friends to go with me for that dinner. And still one of the most memorable moments of my life, just sitting with some dear friends. Will Thorndike was with us, and who wrote The Outsiders. And we just had this really intimate dinner with Charlie. Charlie was tireless. We spent 3 hours, at least 3 hours at dinner, dessert, and he was still going. And we're all just tired, no more questions. And when you're with Charlie, it's very interesting because there's not a lot of reciprocal question asking. You just have to keep firing questions. And, so the big takeaway that dinner was a accumulation of every single thing I've ever read about Charlie. And it was kind of a moment where I was sitting at dinner, and I was kind of the one that was really going to be leading into the questions because it was my thing. And my mind just went blank. I literally, all my notebooks, and I'm just like, oh my gosh, I waited my whole life for this thing, and I can't think of one question. But it was really, and then we got going. Will got us going, and we had a beautiful conversation. But yeah, I mean, the thing that always struck me as just so interesting about Charlie is his capacity to recall events from history, the person, the detail, and then apply it to the question. So there's always a story. There was always a narrative, and just it reinforced a general principle about life. And he did this with such ease, with such humor, with such authority, and it was it was a brilliant dinner. It was also like a very, I look back at that, he was about a year, probably had about a year left of his life, and to kind of have that memorable moment special.
I'm sure he must have narrated a story.
Yeah.
Which you don't find in the books. What was that story?
The thing that always surprised me about Charlie, it was his ability to see through any noise that was going on, and kind of have a very clear kind of principle around that. And we talked a lot about physics that night, and we were talking about just a number of things that were kind of topical of the moment. His just capacity to know physics and to walk through examples was quite special. But yeah, I don't have a good story for you.
So let's play a game.
Yeah.
I'm going to take a couple of names of some greatest investors in the world. Some of these have taught you in your course. What you need to do is tell me a couple of one a very interesting story. You may or may not be the part of that story about them. And then second, tell us if you were to define their investment style or themselves or their life in least possible words, but in most impactful words, how will you do that?
Yeah, so investors that have come to the class.
Yeah, and I'm going to take the names.
Yeah, okay, good.
And before every name, you can have a deep breath in a small order to think. I'll start with Peter Kaufman.
Yeah. So one word that would describe him.
First, you have to tell a story.
Tell a story.
If so, it's like, you are the intellectual descendant
Yeah.
of value investing. And imagine yourself to be this intellectual descendant. Now the thing is, to descend all your knowledge, you have to do two things. Number one, narrate one of the most fascinating story about the man. You may be or may not be involved in that.
Yeah.
But he is the center point. And second, define his life or way of investing in the most impactful, succinct manner. So let's start with Peter Kaufman, and you can take time and think. The story first.
So Peter, the way I met Peter is I had read Poor Charlie's Almanac, and he was the editor of Poor Charlie's, and I didn't know anything about his life. And I just sent him a note. And this is the time when I was, inviting people to come speak. And I didn't know that he had this deep friendship with Charlie, but I sent this random kind of nice email and asked him, would you be interested in coming to the class and speaking about Poor Charlie's Almanac? And he said, and actually sent him a copy of a letter that I had just finished. And I said, this is a copy of a letter, which might be a point of introduction. And it was, I write these very philosophical annual letters. And so there was a lot of meat there for him to kind of go through. He calls me the next day and he said, Chris, I actually read your letter. It's brilliant, by the way. He's like, I have some questions for you. I'm going to email you a list of them, and I'd love to have a conversation. He wrote me an email. He had 8 very specific questions, and we get on a phone call. We spent 3 hours on our first call together, and it was just extraordinary. I literally got off that phone call. My brain was just hurting. I literally had maybe 25 pages of notes. He had just given me this incredible gift of information. I was like, I'm in the presence of one of the smartest humans I've ever encountered in any book, in any place, just in that 3 hours of spending time with him. And I think shortly after that, I hopped on a plane and went to see him in person. And it just, for the following 2 years, I felt like I went to Peter Kaufman school. I was getting essays. I was going to see him. I flew to St. Louis during Christmas, spent a dinner with him and his family, and it was just extraordinary. And it was lesson after lesson after lesson, and he was so gracious. It didn't matter who I wanted to bring. I bring the whole class to see him out at Glen Eyre, and he would host us for the entire day and dinner. It was like being in the presence of a saint, where there was just he would never tire. He could teach 8 hours a day, barely take a drink of water. I was like, who is this? Who is this? So polymath, gracious, giving, never asked for anything back. He just wanted to give. And still to this day, we do an annual class. It's like going back to church for me in many ways. I've heard some of the mental models maybe 5, sometimes 10 times, and each time it opens something new for me in a very extraordinary way.
Can we pack a couple of mental models and you mentioned this previously, your world and your sphere was like this, but you kind of distilled that in this way.
Probably the most important one to this day, it just really simplifies the world for me. He calls it his 3 buckets, and he basically kind of thinks about the world across a timeline. So the timeline that we know of is we have 13.7 billion years of history from as far back as we can account for in physics. But if you were to dissect that timeline, you'd say, okay, there's 13.7 billion years of physics, and then we come along, we have chemistry. And then we come along, we have the beginnings of biology at 3.7 billion years. And then at some point, 200,000 years, we have human history. And then we have recorded human history beginning about 20,000 years. But if you start to think about all of these things as kind of connected to this one single thread, you can start to organize all of this information that you're working on, and where does it live on the timeline? Am I dealing with second law of thermodynamics? Ooh, okay, that exists from here. Now, how do I follow that thread into biology? How do I follow it into human history? And so when you're playing along this timeline, you're playing along and seeing, oh, now I can see the interconnected. These are disparate fields. They're all connected along the thread. And I was like, oh, wow. Everything started to both connect but simplify. And yes, when we're talking about physics, like you can see the manifestations of physics when you're looking at an operating business, whether directly or metaphorically or fractally, however it interacts. And so now, even as I organize my own education, I was playing in these areas of physics, and then this is where I'm moving in biology. I'm moving along the timeline. Oh, I'm reading a biography of Carnegie or Rockefeller. This is where I can now organize in my own mind, so I can go retrieve, okay, this is all my Carnegie information. But now it kind of lives on this timeline for me, so I can actually place it, organize it, remove it when I need to, open it up. I have a recollection of my notes. And so he taught me that. Might seem obvious to some people, but I think in many ways, as we read and we have books, you're kind of like, oh, I remember that book. But the book doesn't have a place to live in your brain.
Yeah.
You need to unpack the book, make it your own, store it. And then you retrieve the first principle. You retrieve the general principle or the idea for utility. So that was probably the most important mental model that I've kind of made my own in many ways.
Give me a specific example of application of this mental model.
Yeah.
To, let's say, one of your bets that you have taken.
When I think about that timeline, I kept going back and saying, is there something that informed everything? Right? So I was really starting to pull for, my own theory of everything. Mm-hmm. And when I kept asking the question of what is that theory of everything, I found myself in the presence of information theory. And so when you go back to that 13.7 billion years of history, that there's some source code that kind of is information. That information wants to do something, and it wants to grow and grow exponentially. So as investors, we work with this beautiful, magical power called compound interest. But if you bring that back to the beginning, in the source code of everything in that bit, that quantum bit, is likely some type of expression of compound interest, of this desire to grow, this desire to survive and grow. So it's an information theory principle, and that kind of continues to create physics and create chemistry. Just that single idea, that single intent creates biology, creates everything that happens in human history, and it happens everything that happens in a business that grows and grows better. And so, everything that we touch that is compounding has this information theory principle in it. So at the heart, what is information theory? The way that I've simplified it is we are reducing entropy, friction, doing something cheaper, better, faster, safer. Mm-hmm. And when we do that, what happens? You increase information. More information throws to the system. Whatever that you can measure that information, that is value creation. And so value creation is what businesses are doing, right? They're trying to do more for their counterparties, their customers, their employees. And we can measure that. Amazon, going from this reducing entropy at an existing system that existed, maybe it was Walmart was the best of consumer goods, and Amazon comes along, can do it cheaper, better, faster, safer. That value creation is their value creation, which is measured in market cap, however you would measure that value creation. Every business is doing that. And any business that's being, where there's not value creation, there's value destruction, is they're on the other side of that. Someone's disrupting them. So this entropic principle, this information theory principle, which you can play with in physics, you can play with it in along that thread, it is the most important principle with which I look at any company, any business. How are they reducing entropy? And what are the manifestations? What is the architecture with which they're doing it?
How do you think Tesla is doing that with the entropy?
So Tesla is probably one of the most important companies in harnessing this very idea.
Okay.
As you do work on information theory, you quickly realize that information, when it's reducing entropy, increasing information, creating value, the best architecture it can do this on is a graph. A graph is a network of nodes. A network is nodes and edges. Information wants to go on a graph. And you'll see that information will flow where there's less frictions, and you see a node, this node is attracting more information. It's a tractor field, and more value creation can happen on that node. So what I've found, and this is kind of a value 3.0 manifestation, maybe even growing into your value 4.0, is graphs are where most of the information or value creation happens. So if I was to just look at one thing, in the history of my investing, it would be just pay attention to the graphs. What are the graphs that are there, and which ones are emergent? Walmart was a graph, logistics distribution graph. They figured out, I can set up a DC here, distribution center, create a densified network, move more goods and services through this. That was a value creation of how it was being done. Amazon comes along, we don't need stores. We can do it cheaper, better, faster, safer, new graph. Starlink and satellites was a new graph. So Tesla has graphs upon graphs upon graphs. And so if we're talking about creating an electric vehicle company, you had to create a supercharger network. Supercharger network was a graph that allowed that EV or that information to move. And now that we've had that, we now have this emergent graph coming on, which would be probably the most important value creation graph in the history of mobility, of course, but would be the robotaxi network. And so you have two robotaxi networks. So you have Waymo, and then you'll have Teslas. And one is cheaper, better, faster, safer. One's going to be able to scale very, very quickly. And that will be an emergent graph of mobility for humanity, particularly here in North America and then elsewhere. And that value creation will be, we think, quite extraordinary. And Optimus is so you look at the humanoid robot, it's another graph, right? So we're going to use the same type of, neural net to interface with an embodied AI intelligence in a humanoid. And when we start to densify that network, we have 1,000 robots off the line this year, 10,000 next year. The humanoids are collecting data in the field by learning, but they're also sharing the intelligence with each other. And that shared cadence of learning is we're going to go up an exponential curve of utility, right? And very few companies, if any, have the complete stack, the vertical stack of both the AI intelligence, the manufacturing capability, the inference capability to be able to build all of this stuff. There was no supply chain. So you have these graphs on graphs on graphs that are present in Tesla in different modalities. We had a very important conversation this week, and I think there is an overarching that Tesla's working on, which it's not just autonomy, it's not just humanoid robots, but there's something being built for the real world, a real world embodied intelligence. So where human and machine interface will be an opportunity to build a form factor for that use case. I think Tesla's going to be there with many different form factors. Some that we can't even imagine what they are, but they'll be emergent from this graph. And that emergent property will be would be quite stunning. And no one else. There's a fork in the road right now. One fork is building very, very fast LLM toward AGI and ASI, and another fork is building real world embodied AI. Only one company is really doing this. Only one company.
This is very interesting.
It's extraordinary. And there's companies that are building prototypes in robotics, which is very difficult, right? We have a prototype, you figure out, and we'll see videos online. Whoa, that robot's doing some cool stuff. And then they'll say, oh, we need the AI. Can you give us a little AI on that? Maybe Meta's doing it, whatever. Google, who's manufacturing 1 million units? Who has the experience to build a million robots where there's no supply chain to buy an actuator, to buy this off the... You have to build all of it and to build 1 million units. Talk to J.B. Straubel, what it took to build 1 million units of Model 3 or Model Y. The most excruciating process you can imagine. So what they had to learn, Tesla's learning curve to produce at scale was the most difficult project that Elon ever took on. And now with that know-how, they can do Optimus. They can do Model 2 or the robotaxi unbox production. And the throughput, for example, just to give you a cadence of learning is, Shanghai, which is the fastest factory in the world, has a throughput of about every 35 seconds you can produce a Model 3, Model Y. We think by the end of this new production line, we'll have a throughput of a robotaxi coming off every 5 seconds. 5 seconds. We take that know-how, we produce Optimus, we produce other form factors of embodied real-world intelligence.
So now there are two things. One, let's say your theory of graph.
Yeah.
And now with your theory of graph, we understand the graphs of, the growth and the value creation of Tesla. And then there is another theory. I don't know who said this, but if you were to find theory of everything for value investing, it should be the margin of safety.
Yeah.
With that theory, if we were to apply the margin of safety on this theory, where we understand the graph of growth and value creation of Tesla, how do you apply that margin of safety theory to Tesla?
Yeah, so when we looked at Tesla as an investment, it was like, it's very hard. It's very hard for someone who has a left brain orientation, is trying to build a model on existing free cash flow and saying, oh, how do I exponentially model this current business into where it's going? Because the model needs to incorporate all of these things that don't exist. What's the financial model for robotaxi? What's the financial model for Optimus? So you have this giant leap between the existing business and what's going to happen. And so you need to right brain, imagine a future, see the whole, see inevitabilities. That is very difficult for most investors to make that leap. So the way that I bridge the gap between margin of safety, which again, this leap to value 3.0, is in worst case scenario, 3 existing businesses for Tesla is their EV business, their full self-drive, which is just you and I paying a subscription for autonomous driving, and energy. So we model out worst case scenario, robotaxi and Optimus never happens. This is how I modeled it a year ago. Never happens. And these businesses just run out. And what would our investment look like in this case? It'd be pretty mediocre. It'd be maybe 0% IRR from where valuations were and kind of are. But that's okay, because I've underwritten my worst case scenario. My worst case scenario is not a permanent loss of capital. It's a modest opportunity cost of capital, maybe minor loss.
And we are comfortable with that.
I was comfortable. But the asymmetry was extraordinary because there are inevitabilities, and now much higher probability inevitabilities to that vector of asymmetry. Here's the next vector. And now that we have Austin running real time, we have Waymo, what I call our Trojan horse and our gift horse. Okay. Because they're going into these cities. They're opening up each city. And guess who's coming behind? Robotaxi, which is 20,000 a unit versus 200,000 a unit. You have a rote code versus a general intelligence.
Yes.
The margin of utility of robotaxi, But Waymo's kind of going in and they're kind of spearheading this work for us, regulatory, getting people used to being in a car with no driver. My God, this is a gift horse. This is a wonderful, extraordinary what they're doing, right? We're a Google investor. So don't get me wrong. I'm like, do we have optionality in Waymo? I think so. But I just know that the physics for me, the first principle thinking, it's night and day. It's really night and day on what I see value creation coming from both of these entities, at least from how I see it today. Margin of safety is, how do we lose? What can I underwrite from what I see today? What am I paying for that? And then what are my vectors of asymmetry that exist on top of that? That's my connection with value investing.
And now, if you know these two things, and let's say if you have $300 million,
yeah,
how do you decide how much to put in?
That's the hardest thing. So we're concentrated investors. So we own less than 10 companies, typically. That's not a magic number. It's just we tend to not have enough great ideas to want to populate more than 10 companies. And in that 10, we want to own more of our best ideas. So, Tesla for us it's about a 10% position in our fund. And I think it should be bigger, and it could be bigger. But that's kind of how I'm thinking about it today, in light of other investments that we have, and based on expected IRR, quality, runway, maybe even some of the near-term headwinds that each business might face. But yeah, I think from a portfolio construction management, it all comes down to comfort level and how well you know the business. We're trying to get to know the business better than anyone else in the world, almost as well as an insider. And that's our goal. But that's how we're currently allocated, which would be probably the right answer, but there's room to own more.
Let's come back to the activity that we were playing. I asked you about Peter Kaufman because you mentioned, you felt like that you were going to Peter Kaufman school for 2 years, right?
Yeah.
Who is the second most important mentor or hero in your life?
Well, hero would be my dad, but that's for other reasons. He was an entrepreneur. He was someone that cared deeply about service and about servicing his clients. He was an accountant, and as an accountant on Cape Cod, you showed up at your client's house and helped them out, and that taught me, like, my life should be about service. It should be about helping others, not just helping myself. And so, I think investing, what we're really trying to do here is do good work for our LPs, importantly, but also give back. The reason I'm sitting here with you, or I go down to Columbia to teach this class, it's about, trying to be of service. Yeah. So, my dad was a big part of that. Yeah.
What is one specific quality from your dad that you would like to give it to your kids? I know the service.
Yeah.
But if you were to tell them one story as an intellectual descendant to your learnings of your father, what is that one story you will share?
Yeah, that's a great one. My dad, I've been writing music over the last year.
You're using AI for that?
Yeah. So AI is an amazing tool for finishing poetry. And when I love writing, right? I love expressing my ideas through written word, and before these written words would live in a journal. They would make their way into a quarterly letter, which became an annual letter, and everyone's like, "What are you writing these long letters for?" I'm like, "I have nowhere else to put the ideas." And then all of a sudden, like, the idea behind being able to finish a written word into a song is quite an incredible expression of creativity. And so I wrote these songs about my dad, two of them. I've written 150 songs in a course of 6 months. So it's been an extraordinary effort. But yeah, I thought a lot about those things. And, one of the things that I remember at a young age was just being present for everyone, whether it be the community, the being a coach of a baseball team, but he was always just, he was always there for people. And I think that's an admirable quality I want my boys to, my daughter as well to have, is just to be very present with people and to leave the world a better place.
Who's your favorite professor at Columbia?
So Bruce Greenwald was my introduction to teaching, and Bruce is a great teacher. I think he's an extraordinary, probably the one that I was closest with over these years. So this will be my 15th year leading the security analysis course, and we were taking interns. We were inviting interns to be part of our company for the summer, and they were coming from the value investing program. And then Bruce finally said, "Hey, would you want to do more with the school?" And that led to a summer security analysis opening up. So I got to know Bruce, and I really admire Bruce a lot. He would be my answer.
Let's say a genie comes to you and says, "Whatever you shall ask shall be given." What is that one thing that you deeply desire right now?
If I had that wish, it would be to bestow something on others, trying to give something back in a more meaningful way.
Okay.
Yeah.
So now remember, this game is about one word or one phrase.
Mm.
Okay. Favorite business investing tool?
Favorite investing tool? My mind.
Any software if you have to point out to?
Yeah, so the tool that was most valuable to me when I was learning a lot about different companies is I would look at what were called SRC books. And these were chart books. And there were different, so there were a 12-year chart book and there was a 35-year chart book. And what I was doing is I was basically studying every company I could possibly see in the world. The orange ones were NASDAQ, the blue ones were NYSE, the green ones were 35-year books. They were thick. I would get them. Every interval they would come out, I would just study them. And I would make a list of tickers of all the companies that had this incredible earnings stream and compounding history. And I would make that list and I would go study those companies. And I just had this incredible touch point with so many different businesses around the world. And I could envision how they behaved in recessions. I envisioned how they acted. And then as you learn more, I used Value Line and some other tools. And I would just studying business in those early formative years, I learned so much about, different industries. And that was it was like a portal to a deeper insight.
If you were to design the final exam of your course,
Yeah.
and if that final exam had only one question, what that question would be?
Why would this business be better 10 years from now than it is today?
Very interesting. And
Yeah.
yes, that question has nothing to do about the world. It has only to do with that business.
Yeah, I mean, when you're thinking about why something should sustain itself, and not just sustain, but potentially widen its competitive advantage, you're thinking a lot about the world. You're thinking about what is timeless, what is structural, and what is transient. And that is ultimately what we're trying to understand in long-term investing and the kind of investing that at least what we're doing and what I try to teach in the classes is what are those things that we think are going to be here tomorrow in 5 years and 10 years, and which others will be competed away. So like everything we do in the class is introducing examples, whether it's operators or exceptional companies that have these types of traits so that the students can say, oh, we've learned something from this particular operator. But that's really the question that we're asking all the time is like, why is this? What is it that about this system or this business that should outlast, that should really endure through time? And it's a wonderful expression. I mean, you can ask that question of any system, whether you're a hotelier in in Japan, you've been running a small inn for 1,000 years. Or if you're like, what are those things that are durable? And that's really fun for me to go through that thinking process. And we have a structure where we kind of look at the 8 layers of a business's moat. And we kind of try to deconstruct all those layers and what are those repeated patterns that we see across different systems and businesses and in industries. Yeah.
And what is one of the most mind-breaking mood that you have identified in any business, which was like, mind-numbing for you?
So the first layer of this kind of mental model that I have is an evolved business model. And I say evolved business model / evolve graph. Like now I detail graph. Is there a better graph? And so the evolved business model does something cheaper, better, faster, safer. And then we can measure that. There's a unit cost advantage to what they do and to what they're providing a service or a product. And better better means higher quality. Can you do it with more quality? And so the graph, is there a graph present that is doing that? And it's so structurally advantaged. Mm-hmm. That's the most important thing for me. And remember, an evolved graph downstream has network effects, but you need the graph architecture to actually have network effects. And the network effects is where you get the flywheel going. The flywheel starts going faster and faster and faster, which we're going to see with Tesla, right? Like as robotaxi scales, more users equals more usage. Users, usage, users, usage. That flywheel starts spinning and you really start to get the scale advantages. And, Nick Sleep, who you mentioned, scale, economic, shared. If we have scale advantages of a better business model, better graph, can we share those scale advantages in the form of lower prices or more services to the customer? Flywheel starts spinning faster. And that's what we'll see with the robotaxi. We'll see an incredible shift in the cost of mobility. To me and you, we'll look back at our car ownership. It'll be so absurd that we spend X percentage of our disposable income on mobility, meaning we owned a car, we paid insurance, we made parking in a city, like you name it. Those costs will be so absurd to the low cost nature of mobility in the future. That is an overarching goal, which ends up solving lots of things for humanity.
One distinct trait about you is your fascination towards graph, and you have a thing called graph IQ, right?
Yes.
What's the most interesting graph about life or about the world, apart from investing, that you've recently seen, which is, taking a lot of your time off thinking?
Whales. When you think about humpback whales or blue whales, you have the first node to node, which is pod to pod, is they figured out how do we create an edge that would be able to travel thousands of miles. And so they've evolved a vocalization to be able to sing a song. So they sing a song from node to pod, and you actually can move information around the entire Earth by way of song. It's a beautiful expression of graph theory, beautiful expression of this species that can communicate information, share. And we don't know if it's a language or if it's just a oneness that they connect with each other through this mechanism. But it's a beautiful, probably first or original graph that's ever existed. And Starlink today is so mind-blowing at what Starlink means to humanity. If you look at how many satellites we have in space, which is maybe about, call it 8,000 satellites, and about 92% of those are Starlink satellites. And as they densify the constellation, what happens? Speed. The speed, lower latency, the lasers between satellites. Carnegie's biggest gift to humanity was to build libraries and give away organs. Think of the possibility, the modern day Carnegie might be, I can actually give you, in anywhere you are in a rural suburban setting, an entire library by way of the internet. And maybe the future of Starlink ends up giving away connectivity. So now anyone in the world has access to the world's information free. Well, that's an incredible gift. And so there's a lot of emergent properties of graphs. Starlink is we don't know what the long-term emergent benefit of low-cost connectivity could be. It's pretty extraordinary.
You're a fan of Claude Shannon?
One of my favorites. MIT, and about 30 minutes from where we're sitting is where he lived in Winchester, and his home was called the Entropy House. He would toil in his basement of the Entropy House, and he would build puppets, and he would build games, and he had early versions of AI, right, in the 1960s, and he was an extraordinary human. And obviously, he's the father of information theory.
Is there any way that you've used AI in your life which has changed your way, in an orbital shift manner? Or is there, what are certain ways that you're using AI? Of course, you're completing your poems,
Yeah.
you're creating your songs. But are you using AI in the world of investing as well?
Absolutely. It's become an integral part of my my process. So the way I'm using it is I use AI as a synthesizing tool. I'm working on a company. So we had 2 calls earlier today with a CEO and a large investor of an investment that we've just made. I will have a transcript from those calls. So the transcript is in PDF form. I'll upload that transcript and I'll update my MIQs. So my MIQs are, what are my most important questions on the investment? I will contextualize my conversation alongside my MIQs, my most important questions. Our information change based on these 7 questions. Like a typical investment, we may have 7 MIQs that we're following. And those MIQs are typically clouds, something that is a short-term concern that's giving us the value opportunity to buy this at what we deem to be a very attractive price based on a long-term IRR. And so we're trying to answer really good. We want to answer the question, is this a temporary cloud or a permanent cloud? And so those MIQs are really important. So most of our work, our due diligence, is trying to refute our hypothesis. It's not a thesis, it's a hypothesis-driven research process. And AI is the most amazing synthesizer for me taking a touch point in an interview, submitting that to my synthesizer, and let's organize my information, update my MIQ. It's like having an assistant next to me. Like, take all my notes. Like, what I don't use AI for is for answers. It hallucinates too much for what we're doing. Don't go give me data. Don't go ask it to do something. It's going to come back with a chance to hallucinate, to try to be creative. That's not what I want. I want you to synthesize, and I want us to engage in a dialogue to say, does this help us understand this question that we have? And it's an extraordinary tool for that.
Who do you consider the greatest, if you were to take one name, who do you consider the greatest investor of all time?
That's a tough one. It would be hard to give. I mean, I have to give the obvious answer would be Warren Buffett. I've taken a bit of a mix of a bunch of that I deem is really important. So like Nick Sleep to me is an extraordinary thinker that I admire the way he thinks about the world, the way he thinks about value creation, would challenge conventional wisdom and think very independently. And I think if Nick continued to run money beyond what he did at Nomad, he would have the potential to have that 50-year runway that we know Warren had. But Nick has. I mean, Nick's continued to run his personal money, so he's got an extraordinary record. But I really like the way Nick thinks. He's a friend now, and he has the qualities of margin of safety and value investing, but also the willingness to think creatively about how value is being how it's emerging and being created.
Now, if you were to bet on 2 super young folks, which you believe will beat the record of Warren Buffett and Nick Sleep?
Yeah, that's a tough one. It's
given if given that runway of time,
yeah,
people are set to beat the records of Nick Sleep and
yeah. One of the graphs that I've built for myself is an extraordinary network of great investors, and there's a handful of investors in that graph that are, I think, have long runways, right? 30 or 40 years of runway of compounding. They're my collaborators. We're sharing ideas. I have a mastermind in every company that I'm thinking about. When I wake up and I'm in my mastermind, I'm getting information that's being shared to me, and I'm sharing information back. There's reciprocation, and we're learning collectively. We're learning together. And there's some names in those masterminds that I would give my money to if I wasn't doing my investing on my own. But for the purposes of this interview, I may not just say their names, but I think so highly of them. I just wouldn't want to upset their normal course of growth by, I don't know, maybe it would collapse the wave function a bit.
Maybe so. A couple of last few interesting things that I wanted to ask. What's the biggest switch that happens when your capital, changes from 3 million to 30 million to 300 million?
Yeah.
What's the switch there? What happens?
So 3 to 30 to 300. Well, 3 is not really serious investing. I think you're kind of doing it as a hobby. I think 30, you're starting to do. You're running, likely other people's capital. You're really thinking deeply about building a business. 300, you've now set something up that has institutional level quality, and you need to have many systems in place to have the operational support, the trading support, the investor, the analyst support, and you're systematizing your processes in a deeper way. And that's important. And your transition, does it get harder to run 300? No, I think that's still a pretty small pool of capital to operate in many different market capitalizations, even in a concentrated portfolio. When you add another zero to that, and you're running 3 billion, it gets more difficult, right? You're trying to own a 10% position size of a $2 billion company. It gets more difficult. Liquidity becomes a factor, and you are quickly growing out of your ability to be involved in sub-billion-dollar market caps as a concentrated investor, and that's okay. But it does start to limit the universe a bit.
Very interesting. Tell me about the story of this 50K domain name that somebody gifted you.
Oh yeah. So I wrote a letter at one point called "The Source Built Arches, Portals, Bridges, and Domes," and what that letter was about is I really started to think deeply about the arch as a medium with which information flows through. And the arch, as Da Vinci would say, is where two weaknesses come together and create a strength. In a portal is a first order magnitude of value creation. A portal can be built by a tradesman or a craftsman. A bridge is built by an engineer. Next order magnitude value creation. Say MasterCard and Visa is a bridge between two counterparties. The next order of magnitude is a dome. It's really what we're looking for. We're looking for domes. A dome is built by an architect or an artist. It's a place where people come together, to where value creation is shared. And that, if you think about Berkshire Hathaway, Amazon, Tesla, Google, these are domes. So I was writing this letter, and I was reading a lot of Heraclitus. And Heraclitus was known as Heraclitus the Obscure. He was obscure because he was dealing with these first principle ideas that are quite paradoxical. When you deal with something that's a deep truth, there's usually multiple truths that you need to hold together. So I was looking at the word Heraclitus the Obscure, and I love wordplay. And I'm looking at Heraclitus, and I was like, I see the word arches in there. I was like, that's cool. I'm writing about arches, and I'm reading about Heraclitus. And then all of a sudden I see the word built. Built, that's kind of interesting. What are the rest of the letters? The. And then I see source built. I put source. I've heard of purpose built. What's source built? Of course, for the letter, I invented the word source built. And I said, it's actually more first principle than purpose built. When something is source built, it's aligned with nature. It's aligned with first principles. It's aligned with how the world works. And it's become a word that's actually means quite a bit to me. And so my friend who had read the letter, he said, is the domain source built available? And I said, actually, it's not. It's owned by some refrigerator company in California. I don't know what they were going to do with it. So, as for a birthday present to me, he phoned me up and he's like, Chris, I bought you the domain source built. I said, what? That's so kind of you. I said, how much? He's like, yeah, it cost me quite a bit. I'm like, how much? He's like, paid $50,000. I said, what? What were you thinking? So yeah, that was quite a beautiful gift.
Very interesting. So your best friend, one of your best friend, describes you, Leonardo da Vinci, right? And this ability of going deep and being open to so many ideas. What do you think the genesis of this is? And how do you think a young person can do that?
I thought I was an average student and kind of going up and I would read what everyone else would read. It was just a moment where I just had this insatiable curiosity take over. And it was just after graduating, probably undergrad, and I just realized, whoa, I had just lost these 10 great years of potential education. And I felt like my education started then. And I would just start going out there and I was reading and bringing in more information. And then there was a moment where I started to just organize it more efficiently, more effectively. It wasn't just reading for reading's sake, but it was reading and it was really making that information my own. And I had a place to create a scaffolding in my own education to where it would live. I could recall it. I could create acronyms for as almost like a memory palace. And all of those things started to really compound. That's where the learning really started to go. And, Da Vinci, as you mentioned, was this incredible polymath, but he was interested in so many things and he just thought about them from first principles and really tried to deconstruct the truths of them, kept these really beautiful journals and codifying his work and rethinking about it and trying to take those ideas and have some sense of utility. How can I use this idea? How can I express it in an art form or towards some end? And that's what's fun. Like as I think about this assembling of friends and collaborators around the world, it's we're sharing information for some utility. It could be the utility of investing. It could be the utility of creating businesses, and it could be the utility of teaching students and letting them go on and do incredible things. That's one of my favorite things is to see the students kind of leave and go off and become an exceptional investor, an exceptional person. Yeah, I love thinking of Da Vinci as a hero in many ways.
They say your worst investment mistake teaches you more than all the sums of your big wins.
Yeah.
What was the most psychological, sky-giving investment for you?
Luckily there hasn't been big scars. I mean, the thing that was always memorable to me is, when I invested in commodity-like companies, that you quickly realize that you didn't own something extraordinary when the price of that commodity changed and anything that you thought was attractive became very unattractive. So we owned some things that were kind of looked like they had this moat, this structural distribution moat, but the underlying commodity would drive your success or failure. And that might be the price of oil. And so I realized that not only did the business model have to be great, that the industry dynamics that drove the cash flow also had to have some sustainable less volatile form of staying power. And so we started to look outside of things that had a lot of direct commodity price exposure.
Mm-hmm.
And that was one big lesson. Luckily it didn't hurt us dramatically, but it's enough to say, let's avoid certain things. You don't see us invest in banks. Banks is another thing that it has this boom and bust cycle. There's a lot of temptation to take risk that we as passive investors can't quite understand. There's something going on right now in the markets that we view as a potential to have a very systemic outcome. And as micro investors, where we're studying businesses, we are observing something that is more systemic that could cause some kind of cascading effects, and that's how would we take those insights and put them into our portfolio to both protect, but also maybe even limit exposure to. So it all depends.
There are a lot of things that I wanted to ask, but there is this concept of velocity and twin lights framework that
Yeah.
you speak about. Can you dig deeper on that, and can you explain those things to us?
Yeah, so Twin Lights is a lighthouse that exists not far from here. So we're sitting in Essex, Massachusetts, and there's two lighthouses that sit off of Gloucester, and it was just a wonderful metaphor that I wrote up because I was thinking about the twin lights of evolution. So the twin lights of evolution that's built in all of us is the light of to survive and to procreate. Survival is kind of your margin of safety.
Okay.
And growth. How is the business going to grow? How is the entity or system going to grow over time? And so these are the, as William Durant might say, find a meal, find a mate. So you see these twin lights in everything. And they're ultimately what we've talked about today is value investing principles is the twin light of survival, margin of safety, and then the twin light of growth. How is this business going to grow over time? What's the growth algorithm? And the essence of everything that grows lies in its freedom. The underlying freedom and unfreedom that's being expressed through that entity. And if we think of a tree, I have a giant redwood here sitting.
Mm-hmm.
That's that particular redwood that we're looking at, coastal redwood,
Mm-hmm.
is a tree that has grown unequaled access to light. Yeah, when you think about the coastal redwood tree growing an unequaled access to light, 380 feet tall, to do that, it has to have the most incredible resilience to its root system. And the roots of a redwood forest actually interconnect with each other. The root systems are interconnected and moving with each other. So some say like a new redwood tree grows out of a root system of an old one. So how old are these things? Are they 1,000 years old, or are they eternal? They've been here for multiple generations, and so it's a great expression of this twin lights framework of the roots, the resilience, but also to grow to great heights. And great redwoods are a great example because they have fire retardant bark, insect resistance that allows them to have this very long duration. So it's a very special tree. There's 3 redwood trees. Here we have the dawn redwood, which is an extraordinary tree that we thought we had lost to evolution. It went extinct, and the tree was found in a forest in China, 1948, and it was returned to the United States, where we had lots of redwood trees, lots of dawn redwoods here. And this once extinct species came and repopulated. So I love that story.
Interesting. Is there anything that you've learned from surfing about investing?
Yeah, so surfing is it's a flow state art, right? So flow state is when you kind of arrive at a point of mastery and something where things seem to pause and stand still, and there's a sense of time dilation that happens. Surfing, you can feel that. Other, I think other arts, you kind of arrive at that flow state. The thing I like to think about is when you start something, you have these natural instincts, and then you can reason. So instincts are system 1 thinking and the Kahneman expression. System 2 thinking is kind of where you're starting to reason, think more slowly. And then way over here is what I refer to as intuition or insight. System 3 thinking, we can call it. That's a world of flow state and intuition. And it's a very special place. With surfing, it feels like we're dancing in this next realm. When you take off on a wave and you're in that moment of kind of where the wave's taking you, it's the most extraordinary feeling. I think powder skiing, you could feel this, and any art where you've kind of reached this point of mastery. And the thing that surfing also brings is this connection to nature, this connection to the physicalness of a sport, which I love. Yeah. But yeah, it gets me out and on a regular basis, when we're down in the jungle, it's a daily activity, a morning activity, it's a ritual, it's kind of a beautiful expression of how one starts the day.
You do it here or in Costa Rica?
Yeah, so we do mostly there on a daily basis. Here, it's less frequent, so we have waves intermittently. We have waves daily in Costa Rica. We're here when there are waves, we're surfing, and when there's wind, like yesterday, we go sailing, we go kite surfing, and foil surfing, and so we have lots of different form factors of the expression of flow state.
Kite surfing is, I think, it's in our bucket list too, because when we went to this thing, Pacific Ocean, there were a couple of people doing that.
It's beautiful.
It's beautiful. Okay, so last 5 quick questions that
Yeah.
I generally ask to all my guests, and I really want you to think before you answer. Take your time in thinking. If you were to predict with all your knowledge, one specific thing about the future where your kids will be living, what is that one specific prediction that you can think of?
I think we are awakening as a species, and as we do that, we will become more. There'll be a more profound sense of love and goodness shared across the world. That's a very hopeful place that I think we're going, and in it feels like the path that we're on. It doesn't look like that way up close, but I feel like we're not getting worse as a species. We're getting much better, and it's a path where there's more abundance and more goodness. Our children, our children's children will enjoy. It won't be a scarcity world. It will be a world of greater abundance, and it will also be a world that will likely exist not just on Earth, but in other places. And AI is gonna help us solve things around physics and around energy that we can't even comprehend. What we don't know, and what we will questions that we'll ask that will lead to a phase transition in energy and in abundance that we would look back and just be in awe of.
Okay, this is your favorite one. What is one product or a service that you really, really need, but you're not getting, which you would pay a young person to solve for you?
That's a good question. So time allocation is time is our most valuable resource, right? So I think when you can reduce entropy around things that take our time, and that if we're using that time in a place that we would rather use that time elsewhere. I think the time that we use to move from place to place would, as we reduce that time and friction and entropy that exists, and you get that time back, that would be really valuable. whether that's time for travel or time for mobility. I think that will shrink over time. And I think we'll be quite surprised at the technology solutions to more easily move around the planet and to potentially other places in the solar system.
Very interesting. What is one thing that you believe you need to unlearn?
So the biggest, I think, the greatest asset that we have as humans is, and which is ultimately our greatest liability, is language. And so language is something that we label, categorize, and define. And as we do that, what we end up doing is seeing the world through a veil of language. And that veil of language is, our mind is constantly processing language. You know, when we're thinking, we're walking down the street, we're driving, just stop for a moment. You're thinking about your day in language. So the thing that I'm trying to unlearn is, how do I quiet the language mind? How do I live in a state outside of language where I'm experiencing the world in real time? That's a flow state moment that we talked about in surfing. But I also think it's a world that you can meet through meditation, through presence, through deep experience. And so unlearning the limitations and liability of language has kind of been at least a philosophical pursuit that I've been thinking about.
Very interesting. Very interesting. I think this was perfect. There are a lot of things that I want to ask you, but I would love to extend this beyond, because I want to respect your time. I know you want to spend some time with your friend, but this was perfect.
Perfect.
So you just said one last request. Malhar mentioned me about the letter that Warren Buffett, wrote for you. So if you can just go there and if you can show us the letter.
Yeah, this is something that Warren had written.
Can you read that?
Hi, Chris. Say hi to the new students. Give the new students my best. Ben's class changed my life. He was,
in many ways, a legendary investor, something like that.
Yeah, Warren. I love this. It says, not a recent likeness.
What made him write this letter? What was the occasion?
So what I'll do is with Warren, I'll write him a note at the beginning of every semester and just give him a quick little update, say hello. And so I've often communicated with him just over the years, and just keeping, whether I'm sending him, something I've written, and he's great to respond. And that's one that came in recently in 21.
Very interesting. How many letters has he written to you?
I think I have 3 or 4.
Wow.
Replied back, but I always hear back from his assistant when he gets something, and she prints it out and leaves it on his desk.
And I see this very interesting graph of choice of compounding.
Yeah.
Can you take a moment to explain this beautiful thing?
Yeah. So this was something I had been, thinking about along that spectrum, right? When you're kind of going from, strategy to logarithmic growth to culture. I have here this wavelength of light. This is the symbol. That's the entropy returns over time. How to go up that log curve. Different flywheels that were in place in each one. Yeah, that was a
strategy, logarithmic growth, and culture.
Yeah, it's something that. Just the way, if you look at each one of these is similar to kind of Amazon's flywheel.
Yeah.
So I was thinking about flywheels in general and how I could think about different ones that were present in different realms of our strategy.
What is 20% in strategy?
Yeah.
Is that your target?
20% IRR. Yeah. Yeah. We're kind of looking, when I think about one of the things that we're trying to find is, why do I think a business will 10x in 10 years? And so if a business is $10 billion market cap growing to $100 billion, 10x over, 10 years is a 26 IRR. So we try to find things that are 15% or better. But ideally, if you can really do your work, this a value 3.0 idea, you can kind of find those 10x over 10 years once in a while. And that's kind of the aspiration in our work is, what in our universe today is a 10 by 10, which is that 10x over 10 years. So today's conversation we had with our, new investment that we made, we think this is very much 26 IRR based on our 10-year math.
Tell us about the company without naming the company.
I would give it away if I told too much, but it's a company that performs a really important infrastructure layer service to an industry that I think is going to grow 5 or 6% or more over the next 10 to 20 years. And this business is kind of in a phase transition from unregulated to regulated. And there's going to be a period where, as they make this transition into this regulated, that the incumbent, which they are, will be able to enjoy the scale advantages necessary. And as the regulatory comes in, it will even further entrench their competitive advantages. And over the next 3 years, that'll become more apparent. So all of the clouds we've identified for this company are unique to this kind of transition, this transition from unregulated to regulated, and how they kind of thread the needle in a way. But it's still quite asymmetric because of the fundamental nature of the business, the cash flows. And once these clouds clear one by one, and this, I think investors realize what this is, it'll be recognized in the stock price.
Thanks a ton, a million times for doing this.
Thank
And
you.
taking time out.